All right, let me tell you something that's been keeping me up at night. And honestly, after you hear what I'm about to share, it might keep you up too. We're watching something unfold right now that's happened exactly 3 times before in modern history. Same pattern, same sequence. And each time, the outcome was devastating. I'm talking about economic shifts so massive they literally redrew the map of global power. Here's what's wild. Most people, they're completely asleep at the wheel. They see headlines about China and think it's just business as usual. Some trade tensions here, some diplomatic friction there. Nothing to worry about, right? Wrong. Dead wrong. Because right now, as I'm recording this, China just dropped their US Treasury holdings to $682.6 billion. That's a 17-year low. But here's the kicker. They're buying gold instead. 14 consecutive months of gold purchases. They're not just adjusting their portfolio. They're preparing for something. And when you zoom out and look at the full picture, it's not random. It's a strategy. One that's been executed successfully 3 times before, and we're watching the 4th iteration play out in real time. Let me break down this pattern for you, because understanding it is the difference between protecting your wealth and watching it evaporate. There are 4 stages to this economic power shift. Always 4. Always the same order. And right now, we're deep into stage 3. Stage 1 is what I call the honeymoon phase. 2 economic powers become deeply interconnected. Trade flows explode. Money moves freely between them. Everyone's getting rich. Everyone's happy. Economists write these glowing papers about how interconnected the world has become. Politicians give speeches about partnership and mutual prosperity. It feels permanent. It feels safe. That's exactly when you should be most worried. Stage 2 is where things get interesting. One side starts quietly accumulating strategic advantages. They're building up reserves. They're diversifying. They're creating alternative systems. But they're doing it so gradually, so carefully, that the other side doesn't even notice. Or if they notice, they dismiss it as insignificant. This is the asymmetric accumulation phase. The rising power is saving, planning, positioning. The dominant power? They're spending, borrowing, assuming their position is unshakable. Stage 3 is strategic repositioning. This is where we are right now with China. They've accumulated enough leverage, and now they're restructuring everything. They're building alternatives to Western systems. They're reducing exposure to dollar assets. They're creating new trade networks that bypass the US entirely. And they're doing all of this while maintaining a smile in diplomatic meetings, while signing trade agreements, while acting like everything's normal. Stage 4? That's the controlled demolition. The rising power triggers the collapse deliberately. They weaponize all that dependency they spent decades building. They use economic force to achieve political objectives. And the established empire can't respond because they're trapped by their own debt, their own system, their own assumptions. Now I know what you're thinking. This sounds dramatic. Surely it's not that serious. Let me show you the historical evidence. Take Britain and Germany from 1900 to 1914. Britain was the undisputed global superpower. The British pound was the world's reserve currency. London was the center of global finance. Germany was rising fast, but most British observers weren't worried. The 2 countries had massive trading relationships, mutual prosperity. Then, between 1900 and 1910, Germany restructured their entire foreign reserve strategy. They reduced British pound holdings by 60%. They accumulated massive gold reserves instead. They built alternative trade relationships with Russia, Austria, Hungary, the Ottoman Empire. The British barely noticed. They were too comfortable, too confident in their position. By 1912, German bankers were literally discussing in private meetings how to use financial weapons against London. We have the documents, the meeting minutes, the strategy papers. Then, 1914 hits. World War I begins. Everyone focuses on the military aspect, the trenches, the battles. But here's what really happened financially. Germany immediately froze British assets in German banks. They recalled gold from London. This triggered a massive liquidity crisis. The Bank of England nearly collapsed in the first week of the war. Not from bombs, from bank runs, from financial contagion, from the weapon Germany had been building for years. Britain had to suspend gold convertibility just to survive. Within 30 years, the dollar replaced the pound as the world's reserve currency. Economic dominance shattered through economic warfare. Now let's look at example number 2, Japan and America from 1950 to 1990. After World War II, America rebuilt Japan, made them a trading partner. The relationship seemed perfect. America got cheap electronics and cars, Japan got access to American consumers and capital. Mutual benefit, right? But starting in 1960, Japan began accumulating dollars, massive amounts. By 1985, Japan held over $300 billion in US Treasury bonds. But they weren't just holding dollars. Japanese companies were buying American real estate. Rockefeller Center, Pebble Beach, Columbia Pictures, American icons. Americans thought it was just rich businessmen buying trophy properties. It wasn't. It was strategic positioning, converting dollar reserves into hard assets. Then 1985, the Plaza Accord. On the surface, it looked like cooperation. In reality, Japan forced America to devalue the dollar. They used their accumulated leverage to reshape global currency markets. By 1987, Japan was openly preparing for a post-American economic order, building Asian trade networks, creating yen-based settlement systems. Then came October 1987, Black Monday, the worst single-day stock market crash in history at that time. The Dow dropped over 22% in one day. Over $1 trillion in market value vanished. Was it random panic? No. It was triggered by coordinated selling from Japanese institutions. They were trying to collapse the American financial system, and they nearly succeeded. America survived, barely. Only because the Federal Reserve intervened with unprecedented liquidity injections. But the message was clear. Japan had proven that financial weapons work. China was watching. China was learning. China was taking notes. Example number 3 brings us closer to the present. Russia and Europe, 2000 to 2022. After the Cold War, Europe rebuilt relationships with Russia. Massive natural gas deals. By 2015, 65% of German natural gas came from Russia. The entire European industrial base running on Russian energy. European leaders gave speeches about how economic ties prevented conflict, how energy partnerships created peace. Sound familiar? Meanwhile, Russia accumulated over $600 billion in foreign reserves. They reduced dollar exposure systematically, increased gold holdings by 300%. They built SPFS, their own alternative to the SWIFT payment system. Nobody paid attention. Western analysts dismissed it as Russian paranoia. Then February 2022. Russia invades Ukraine. The West responds with massive sanctions. They freeze Russian reserves, cut Russian banks from SWIFT, ban Russian energy exports. They think they've won. Then something shocking happened. Russia didn't collapse. Their economy didn't implode. The ruble crashed initially, then recovered within months. How? Because they'd prepared. For years. They'd built alternatives. They'd positioned perfectly. Then they turned energy into a weapon. Cut gas flows to Europe. Triggered an energy crisis. Drove European inflation to double digits, the highest in 40 years. German factories shut down. Not from bombs. From no energy. Economic warfare. All through weaponizing dependency. 3 historical examples. 3 different time periods. Different powers, different continents. Identical pattern. Identical sequence. Identical outcome every single time. And now China's running the same playbook, but bigger, more sophisticated, more complete. Let me show you exactly what's happening right now. Stage 1 was completed between 1990 and 2010. America opened trade with China, made them the world's factory, outsourced manufacturing. Trade exploded from billions to trillions annually. Everyone got rich. Deep interdependence established. Stage 2 happened from 2010 to 2020. China accumulated $3.358 trillion in foreign reserves as of December 2025. But they did something more strategic. They built a parallel system, the Belt and Road Initiative, over 150 countries participating now. In 2025 alone, China invested $213.5 billion through the BRI. Roads, ports, railroads, pipelines, all connecting Asia to Europe to Africa. All using Chinese financing, Chinese construction, Chinese standards. The Asian Infrastructure Investment Bank, created to compete directly with the World Bank and IMF. Over 100 member countries now. The digital yuan, a central bank digital currency that can bypass SWIFT, bypass Western sanctions, bypass the entire dollar system. China wasn't just trading with America. They were building the replacement, and now we're in stage 3. This is where it gets absolutely terrifying. In November 2025, China's US Treasury holdings dropped to $682.6 billion, the lowest level since 2008. That's a massive reduction from their peak of over $1 trillion. Where's that money going? Gold. China's gold reserves hit 74.15 million ounces by December 2025. That's the 14th consecutive month they've increased gold holdings. But it's not just about gold. China's CIPS payment system, their alternative to SWIFT, processed 175 trillion yuan in 2024. That's 24.47 trillion US dollars, growing 43% year over year. This isn't a test system. This isn't experimental. CIPS now has 1,683 participants across 124 countries. It's a functioning alternative payment system that's ready to replace SWIFT. They've signed currency swap agreements with over 30 countries. Russia trades entirely in yuan and rubles now, no dollars. Saudi Aramco is reportedly quoting 65% of a crude oil contract with Sinopec in digital yuan. Think about that for a second. Saudi Arabia, America's longtime Middle East ally, pricing oil in yuan instead of dollars. China's also stockpiling critical resources at unprecedented levels. Oil reserves at all-time highs. Strategic metals, copper, lithium, cobalt, rare earth elements, grain reserves at record levels. They're preparing for disruption, for sanctions, for separation, for economic confrontation. Here at Next Generation Finance, we've been tracking these developments closely. And let me tell you, the timeline is tighter than most people think. Now everyone who hears this has the same objections. Let me address them. Objection 1. This time is different. China needs America as much as America needs China. Economic interdependence prevents conflict. Wrong. Germany needed British trade in 1914. Massive commercial relationships. They went to financial war anyway. Japan needed American consumers in 1987, their largest market. They attacked anyway. Russia needed European energy revenue in 2022, 40% of their export income. They weaponized it anyway. Economic interdependence doesn't prevent conflict. It creates the conditions for economic warfare because it creates leverage. China's Belt and Road Initiative now spans 150 countries. They don't need the American consumer like they used to. They've built alternative markets. They're ready for separation. America isn't. Objection 2. The dollar is too big to fail. It's the reserve currency. Everyone needs it. The British pound was the reserve currency for 150 years. Dominant, unchallengeable, until it wasn't. Reserve currency status isn't permanent. It's conditional. It requires trust, stability, fiscal discipline. And those conditions are eroding rapidly. U.S. debt hit 124.3% of GDP in 2024. The federal deficit was $1.78 trillion in fiscal year 2025. Interest payments on the debt now exceed $1 trillion annually. That's more than we spend on Medicare, more than defense. Every time America freezes someone's assets or cuts them from SWIFT, they're showing the world why they need an alternative. And China's building that alternative right now. The digital yuan processed over $250 billion in transactions in 2023, growing exponentially. Over 40 countries are now testing or implementing digital yuan systems for trade. The dollar's dominance is ending, not in theory, in practice, right now. Objection 3. America can respond. We have the military, the technology, the economic power. The response time is too slow. The dependency is too deep. Look at Europe and Russia. When Russia cut gas flows, could Europe respond effectively? No. They couldn't replace the energy fast enough. They just suffered. America has the same problem. Worse, actually. China controls the supply chains. controls the manufacturing, controls critical resources. If China triggers stage 4 tomorrow, can America replace Chinese manufacturing quickly? No, not in months, not in years. Semiconductors take years to build new fabs for. Pharmaceutical supply chains take years to rebuild. Rare earth processing takes years to establish. You can't bomb your way out of a supply chain crisis. Technology doesn't help when the semiconductors are made in Taiwan, and China controls Taiwan's economic options. Economic power doesn't help when your economy is built on debt, and your creditor is your adversary. So here's the reality nobody wants to face. Stage 4 is coming. Not might come, will come. The pattern is absolute. The sequence is inevitable. What do you do? How do you prepare? First, understand we're in the danger zone right now. The next 12 to 24 months are critical. China's positioning is nearly complete. They're still reducing U.S. exposure, still building alternatives, still strengthening relationships. Second, reduce exposure to assets that depend on Chinese manufacturing or dollar dominance. Most Western stocks are exposed through supply chains that run through China. Government bonds are vulnerable, especially if China starts dumping treasuries. Real estate in major cities could suffer when foreign buyers disappear. When China triggers stage 4, these assets don't just correct, they crash. Third, position in assets that benefit from economic separation or supply chain breakdown. Defense contractors tend to explode when conflicts emerge. Companies focused on domestic manufacturing and reshoring create massive opportunities. Energy independence becomes crucial. Agriculture and food security become strategic. Gold and hard assets become stores of value when currencies fail. Fourth, diversify away from pure dollar exposure. Not all at once, that would be panic selling, but strategically. Gold as the ultimate crisis hedge. Maybe Bitcoin as a decentralized alternative. Foreign currencies from neutral countries like Swiss francs or Singapore dollars. Fifth, prepare practically for supply chain disruptions. Medicine, stock up 3 to 6 months. Electronics, buy now before prices spike. Critical supplies, whatever your life depends on, have it before the crisis hits. These aren't wild predictions. This is pattern recognition based on historical precedent. Positioning before it's obvious. Before the panic. Before the crowd. You know who's already doing this? Central banks. They're diversifying reserves, buying gold at record rates, reducing dollar exposure systematically. Billionaires are moving money. Family offices are shifting allocations. Private equity is liquidating Chinese positions. Smart money is reducing U.S. equity exposure. They understand the pattern. They're acting on it. They're positioning for stage 4. The question is whether you will too. Because here's what happens to people who ignore the pattern, who believe this time is different, who trust the system will protect them. They lose everything. The Dutch merchants holding tulips, wiped out overnight. British investors holding pounds, destroyed in months. Japanese real estate speculators, lost decades of wealth. European manufacturers dependent on Russian gas, crushed in a year. All of them believed the system was stable. The relationship was permanent. The crisis wouldn't happen to them. All of them were wrong. All of them paid the price. The pattern doesn't care about beliefs. It doesn't care about hope. It only cares about mathematics, leverage, timing, preparation, and right now, the mathematics favor China. The leverage is with China. The timing is China's choice. The preparation is nearly complete. What happens next will reshape the global economy, transfer wealth and power, end the dollar era, begin something new, not through military conflict, through economics, through the same pattern that's worked 3 times before. The only question is whether you'll see it coming, whether you'll position for it, whether you'll survive it, whether you'll profit from it, or whether you'll be another statistic, another person who ignored the pattern until it was too late. History is screaming the answer. The data is showing the answer. The pattern is revealing the answer. What you do in the next 12 months will determine the next decade of your financial life. This is not financial advice. Always do your own research and consult with qualified professionals before making investment decisions. And hey, if this opened your eyes to what's really happening behind the headlines, do me a solid, smash that subscribe button like your portfolio depends on it, because honestly, it might. Drop a comment below and tell me which stage you think scares you most, or if you're already positioning for what's coming. Let's build a community that's not just informed, but actually prepared for the economic shifts ahead. Your future self will thank you for paying attention today.